Welcome back for another look at the charts. Today we'll be looking at EURUSD, GBP USD, AUDUSD and silver. With no time to waste, we move to EURUSDs for our chart. The recent downtrend that the currency pair undertook after headlines of a possible rate cut by the ECB and the subsequent rise of the greenback before the Fed's FOMC meeting have dominated the scene. Temporarily, the currency pair is, in our opinion, in a sideways motion with bearish tendencies. On the 27th of January, in the late European session, EURUSD dropped to test the 1.2055 support line. Even though this level was not clearly engaged nor breached at the time, we note it as an important one due to the price action being nearby it also on the 18th of January, making it important. Other levels we have noted even lower are the S2 1.2005 line and the S3 1.1955 barrier that were last seen in the previous December. In favor of a bullish scenario, we can first see the price action shifting towards the R1 1.2125 resistance level as an initial reaction by the market. This level can be considered a barometer for the currency pair, as the direction could change depending on whether the price action is below or above it accordingly. Higher, we have noted the R2 1.2185 line, of which the price action consisted from the 21st to the 25th of January, making it very relevant. At the top, we have the R3 1.2225 barrier as a possible target if the buying is strong enough. At the moment, the RSI indicator below our chart is nearby the 30 level, confirming a more bearish sentiment among traders. Moving now to cables for our chart, the difficult circumstances from the virus outbreak in the UK remains the most dominant matter for the nation, but investors seem to ignore it for the time being. Cable has been in a rather impressive upward trend line, with some gradual movements higher taking place in the past months. Even though the price action managed to surpass our R1 1.37 resistance level since the 21st of January, it has returned lower in the most recent 4-hour sessions. A resurgence above the R1 could send cable towards the R2 1.3780 barrier or even the R3 1.3850 hurdle, which would both be multi-year highs. In case of a sell-off, the currency pair could initially fall to the S1 1.3615 support barrier that was last tested on the 20th and 26th of January. Lower, the S2 1.3540 could be the next choice for the bears, as was the case on the 18th of January. In an extensive selling market, the S3 1.3450 could become a stop point, also as it was seen on the 11th of January, making it relevant to this month's price activity. A breach below the S3 1.3050 could signal a change from our current upward outlook to a sideways one. Following now is AUDUSDs for our chart. Aussie followers should be aware of developments in China, with the most recent one being the Chinese central bank removing money from the banking sector and keeping interest rates high. These developments could evidently affect commodity currencies such as AUD or NZD. The currency pair was the most active among the majors since yesterday, the 27th of January, as it lost more ground than all of them. For this reason, the Aussie is currently aiming for our S1 0.7580 support level, and it could make a stop there as it did back on the 23rd of December. Lower levels we have noted are the S2 0.7520 level and the S3 0.7455 barrier, which could be eyed by the sellers. On the contrary, if the pair regains its bullish appetite, it could make a turn to the R1 0.7665 resistance level. A continuous buying trend could even force the currency pair towards the 0.7750 line attempted on the 26th of January but not breached. Our highest level is the R3 0.7810 hurdle, and it was last seen in the first week of 2021. Despite the current downtrend, which has forced our RSI indicator to drop below 30, the currency pair remains in an upward trend line since late March 2020. And last but not least, silver's daily chart. Traders should be aware that precious metals price action activity really depends on how the US dollar will react to stimulus package announcements in the short term. At the moment, the precious metal is trading between our R1 2565 resistance level and our S1 2470 support level. Most of the trading activity in January has been between these pre-mentioned levels, thus we assume a breach of either of them could send the trend further. If silver comes under demand, then its price could surge and attempt the R2 2670 barrier or the R3 2760 hurdle that both became targets in December. On the contrary, a sell-off could send silver's price to the S2 2375 level with the possibility of moving even lower for the 2260 barrier, which is our current lowest point for the specific chart. Overall, in more long-term view, the precious metal remains in a sideways motion trading between our R3 2760 resistance level and the S3 2260 support level since August 2020. We hope that you found this report useful, and if so, please don't forget to subscribe and to share. From all of us here at IronFX, best wishes for solid trading.